Here's an example of somebody that doesn't understand taxes. They owe almost $40,000 at the end of the year. Someone that structures their accounts in such a way because they understand tax law, it's only a little bit over $14,000. So just because someone's financially educated, they save 25 grand that year. So I'm going to show you basically a normal way of doing your taxes, and then with better planning, how you can save a lot more of your income with taxes. So this year I made over $180,000 in business and W-2 income, and I made over $80,000 in short-term gains from the sale of stocks. So let's say, what if I didn't plan this well and I put it into a taxable account? So we're going to have to pay tax effectively on $260,000. I'm married, so I can take a standard deduction. We're filing jointly. I'm not going to go into itemized deductions here, just keep it as simple as possible. And we're going to say that I had a loss from a taxable account in a prior year for $3,000. Child tax credit. This is a tax credit, so a tax credit comes off at the end, deductions come off the income. So we're going to subtract those and figure out how much taxable income we have. So we have $229,300 of income that can be taxed. So now we need to go through each of our tax brackets. So married filing jointly, 0 to 22,000 is at 10%. So we're going to take the first 22,000, we're going to multiply that by 10%. $2,200 of tax. Now you go to the next tax bracket. So if you take the difference between the 22,000 and the 89,450, so we take 67,450, multiply that by 12%. So at the 22% tax bracket, what we're going to have is the difference between the 89,450 and the 190,750. So that gives us $101,300 that we need to be taxed at 22%. So that gives us $22,286. So what I need to do now is, since this 24% tax bracket covers all of the income that we have remaining, so I need to take the difference of this from the last tax bracket, which is $190,750. So what that comes out to be is $38,550, and that's going to be multiplied by the 24% tax bracket. So that comes out to $9,252 that will be owed in taxes. So now I have to add all this up for total tax. Now I have that $41,832, but I still have that tax credit here, so I'm going to subtract $2,000 child tax credit, and what I'm left with is $39,832. How much was I actually taxed? So I take that number, divide by the $260,000, so it's basically 15.3%. Now, can we do any better than this? With some better planning, let's see what we can do. So we're going to still make the same amount of money. We've made $260,000. $180,000 came from the businesses and the W-2s. So I sold over $400,000 worth of stocks with a $320,000 basis. So instead of getting the $80,000 from the taxable account, which happened over here, so I had to pay tax on all of it, I structured my $400,000 account so that it was in a tax advantage account. So it's a 401k, a 403b, an IRA. Instead of that being taxed, because that's sheltered, you don't pay tax on that. So I'm only really going to have to pay tax on $180,000. That $180,000, well, I had some of that income is from a business. So I have deductions for the business. So I have cell phones, I have computers and other assets, the whiteboard, the stuff that you see in front of you. This can all be deducted. So I have about $10,000 of deductions that I can take from my business. So that brings me down to about $175,000. Now, my wife, she takes care of us, she takes care of the house, she takes care of the kids, the rest of the family. So what we do is we take a standard deduction, but we file jointly so we could take this. So instead of just half of this, which would be if I was single or filing separately, so we subtract off $27,700. We also had a carried loss that will deduct from our regular income, which you can do about $3,000 a year. So we'll take that from that taxable account that we had previously, and that brings our taxable amount down to $139,300. I have a 401k that I'm able to contribute to. You can contribute up to $22,500 in 2023, which is effective for the April 15th, 2024 tax year. This goes up every year, but effectively that brings our taxable income down to $116,800. Now, how much tax do we owe? Well, you're still going to owe the first $22,000 at 10%, So that's the same as over here. You're going to owe $2,200 there. Then we're going to fill up the second tax bracket just as we did over here. So you take that $67,450 times that 12%, you get $8,094. Now here's the difference. $116,800 doesn't fall into the 24% tax bracket. It's still within the 22% tax bracket. So we need to take the $116,800, subtract out the $89,450, and multiply that by 22%, which comes out to about $27,350. So I owe another $6,017. So that comes out to $16,311. But we still have that child tax credit, so we're going to subtract that off of our liability for taxes. I'm only paying $14,311. Now, I would say that really I'm paying 5.5% on all of my income, but some people will say, well, that $80,000 doesn't count because it was profit in a non-taxable account. That's fair, whatever. Here's an example of somebody that doesn't understand taxes. They owe almost $40,000 at the end of the year. Someone that structures their accounts in such a way because they understand tax law, it's only a little bit over $14,000. So just because someone's financially educated, they save 25 grand that year. If you'd rather have that 25 grand in your pocket, subscribe. I teach financial education, basically how to keep more of your money, how to make more money, how to invest, how to save, get out of debt. We'll cover a lot of topics that I believe they should teach in school, but they don't. Thank you for watching and have a great day.